Hey everybody, Ace here. Vanguard just released their How America Invests 2020, which is their analysis on their 5 million retail users and how they've been investing in the last 5 years. I'm going to give you a 4-minute or less recap on the 58-page document and tell you the interesting highlights that I read through. Vanguard has over 5 million retail house clients in this data report that they released. The report covers the years of 2015 to 2019, which has been an exceptional bull market, and the first quarter of 2020, which includes the COVID drop. Everything from here on out is just going to be statistics and what I found interesting in the report, so feel free to put me on that 1.5 or 2x speed and give me a good listen through. With those 5 million accounts, there's over $2 trillion invested in Vanguard. That is a lot of zeros that are scrolling through right here, with the median or middle being $60,900. Vanguard uses a lot of medians or the middle rather than the average, because when you try to average $2 trillion, it tends to skew the numbers a lot more than just finding the median or the middle number. So let's go over the medians. The median account balance is $60,900. The median age of the users is 54 years old. And the median length of accounts held in Vanguard is 14 years. As time shifted from 2015 to 2019, Americans started shifting their accounts from less equities into more cash. As of 2019, the average Vanguard account has a long-term portfolio outlook, with assets in equities being 63%, bonds being 16%, and the remaining cash holdings being 21%, as compared to their 2015 numbers of 67% equities and 15% cash. It just goes to show you, as markets continue to hit their all-time highs and they continue to go upwards, people tend to get more conservative, so they're more willing to hold more cash just in case there is a correction or a crash. Another interesting but not so surprising aspect of data has been index fund investing has beat active investing in stocks for the last 5 years, with 71% of households holding an index product. But the most common investment type was a mutual fund, excluding money market funds. But mutual funds have decreased in usage while ETFs have increased. And on average, Vanguard retail households have invested about 19% in international funds, whereas there is a home bias. Therefore, if you're living in the United States, you're more willing to invest into companies and index funds within the United States. Or if you're living outside the United States, you're more willing to invest in your country's funds that are outside the United States stock market. Moving on for a quick hit on older investors. Older investors tend to have a more conservative portfolio than younger investors. Investors in their late 20s and 30s tend to be a lot more aggressive than older investors, with 90% of their portfolios being in equities, versus 60% of those who are retirement age investors, which is to be expected. Because as you get closer to your retirement age, you want to be a lot less risky with your money just in case there is a correction or a crash. Whereas when you're a lot younger, you don't have much to lose and you have time on your side, allowing you to be more risky. I myself am 92% into equities, about 5% into bonds, and the remainder in cash holdings, which isn't a lot of cash. What I also found interesting was as the account balance went up, the amount of cash holdings actually went down. Because I personally would have thought, as you had more of an account balance or a larger account balance, you would want to be a little bit more conservative, definitely as markets are hitting their record highs, so you'd be holding more cash. And when you're younger, you don't have much to lose and time is on your side, therefore you'd be all in on equities and you wouldn't have cash holdings. There's a lot of good data in this 58-page report, but I just wanted to highlight some of the cool and interesting ones that I thought when I was reading through. There's probably a lot of things that I didn't even touch on that you might find cool, so just for you, I'm going to leave a link in the report down in the description for anyone that might want to read it. If you liked this video, learned anything, or liked the quick summary I gave, please just tap that thumbs up button for me. That'd greatly help me out. Subscribe for more content and leave me a comment down below on what data you found is interesting. And until then, I'll see you in the next video.